Hello, everybody. Welcome to Tuesday. The S&P 500 was down about 0.7% today. It's actually not bad considering what was happening today. The Federal Reserve has been out in force. There was three different interviews going on today with different Fed governors, all talking very aggressively about raising interest rates, about how we're a long ways from being over for fighting inflation, and all of these different types of things. If you recall back in the big run-up that we had at the end of March, the Federal Reserve came out in early April and started saying some of the same things and eventually drove the market down. It's pretty good that the market held up where it was here, just at negative 0.7%. There were other things going on in terms of the situation that we had, in Taiwan with Pelosi visiting, some tension there too. So 0.7 is not bad. We did hit this resistance level again, kind of the same level for 3 days in a row, around 4140, 4130 on the S&P 500. I think 4200 is the top of that resistance level. It's going to be kind of hard to get through there because it's fairly big resistance. But if it does go through there, it could go into the 4300 to 4400 range. So we'll see how this plays out. But again, the Federal Reserve is trying to bring down the market, or at least soften the market or slow down the upturn, because that market upturn actually creates an inflationary environment. It makes money looser, makes more money available, and they're trying to make less money available so that we can stop spending as much as we're spending as a group and slow things down. So, we'll see how that goes. But we did have some kind of bad news that was good news today. The number of job openings hit a 9-month low. That's one of the things the Federal Reserve is looking for, is to bring down the number of job openings. Really, the Fed is getting everything they want in terms of slowing of the economy. We just haven't seen it translate quite yet all the way through to the different areas of inflation, especially in the food and energy area, which is going to be probably the hardest thing to bring down. And probably the biggest risk is that they can't bring some of that down fast enough and they have to raise rates so much. But two groups, one group right now that's thinking the market's going to go up because the Fed's going to be lowering rates sooner than later because inflation is going to come down faster, and or the recession is going to get bad enough here and around the rest of the world that the Fed can't continue to raise rates. They're going to have to settle. And the other group that thinks the Fed's going to keep going on rates and bring us down and bring the market down to a new low. So I like the balance we have now between kind of the pieces that we used to have in the market that are in Treasury and T-bills and, our normal portfolio, which is doing okay as far as that goes. So it looks like an interesting time. We'll see what happens. Again, I don't see this particular downturn today as being as bad as it could have been with the Fed coming out with that many interviews. So we'll see how, happens tomorrow and how things play out this week. So look forward to talking to you then. Thank you very much.